This episode was co-produced by Startup Days, the Swiss networking and business event for startups, investors, enablers, and corporates. Check out startupdays.ch to learn more about this year's edition, taking place in Bern on May 14th, 2025. Again, that's startupdays.ch.
I'm in the business of taking high risk. VC investing is early stage in particular and is a high risk business, but it's about understanding the risk that we take for the right type of reward. And so it always comes down to that. And then the second thing that I brought with me is definitely the ability to be comfortable losing money, because you're going to do that a lot.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Silvan.
Alessandra, a very well welcome to the Swisspreneur Show. It's a pleasure to have you as a guest today.
Thank you. It's great for me to be here. I've seen many people coming. I was very jealous. So I'm glad that I finally make the cut for an invitation. So thank you for having me.
Absolutely. We love talking to investors because then we can always learn what you're excited about and what the next trends might be. Sure. You're a principal at Ace Ventures, a VC fund backing Swiss tech founders at early stage, building companies basically.
Yeah.
And
correct.
Before we talk about what you do, I want to start with your personal background. Mm-hmm. You're originally from Italy, but you then studied there and then eventually you ended up going to China.
Correct.
That's not the most nearby destination. What motivated you to go to China?
Yeah, good question indeed. So, I'm Italian. I grew up in Torino, which is the city in the northwest part of the country. I was fortunate enough to have the best engineering school in my hometown, Torino, right? So perfect. I never had to leave. Literally, I never even had to leave my parents' house, right? While I was in university, which is very common for university students, typically to, live in the town where the university is. So yeah, at some point during my master's degree, I started to develop this itch to go and live abroad because it's something that everyone was doing. And I wanted to see the big world. And of course, traveling is great. And I consider myself a well-traveled person. And back at the time when I was 23, definitely seen different places in the world, but I never lived abroad. Okay. And so why did I pick China? So as you can imagine, there were many popular destinations among the master degree students in Europe, typically, or in exotic locations.
Like Australia or something.
Australia, true. Spain was very in demand as well. Barcelona and Valencia, very high in demand. But I was really attracted by China, just by the idea of being very far away from home. In all senses, just physically, geographically, but also in terms of culture. And, I knew, right, China was the driving force of the world. I was like, I want to go there and see what it's like to live there. Yeah, and cool. So I ended up spending there more time than I initially thought I would have spent, I guess.
So you did spend 2 years there. What did you take away from it? How did that change you or your perspective on things?
Yeah, so I finished my master's degree there, spent a lot of time at the Tsinghua University in Beijing. Beijing is where I was. What did I take away? China is very chaotic. First, it's really busy. There is like millions of people. And I think my very first takeaway was that in Europe, we are very tiny. Right, like in Switzerland, even more so. Yeah. We're tiny. We're a tiny country. We're a tiny continent compared to China, for instance, and many other continents in the world. And also, we live a little bit in a bubble here. Right, like It's very few people. Everything is safe. We're a small country. There is space, and then you see these monstrous metropolis, and then you realize that's the driving force of the world. Right. Yeah. So I think I would say that was my biggest takeaway. We're tiny, and I can only encourage everyone, and I think I've been saying this to all of my friends, regardless of age, career, stage, please just go and see the real world. Outside of Switzerland for sure, but also outside of Europe, live in a big city that is relevant for your industry for a while because you can only learn from there. I always come back very inspired when I come back from this trip, so I can only recommend.
I imagine. You then did come back to Europe. You took a job in Switzerland, and I wonder what attracted you about Switzerland.
Yes, and I'm going to be honest about it because back then I was 26. I moved back to Europe, to Italy, without really knowing what to do because at the point, I had my piece of paper saying that indeed I had a master's degree in energy and nuclear engineering, which is, rare to find. In Italy, there is really no nuclear industry. So, it was really not an option for me to stay there. And after that, I lived outside of Italy. I was like, that's the sort of career that I want to go for. I wanted to be an expat, right? I really was dreaming about it. And then a friend came and told me, you know what, I think you should be trying and becoming an oil trader or be in the oil and commodities industry because, first of all, you're going to make lots of money. Secondly, they look exactly for people like you, engineers, which have done some time in research, which is what I was doing after my master's degree, and in particular with experience in China. China is the driving force in demand in the oil sector, right? So very interesting. Try and go. And you know what, I really like the idea, obviously. Like, I was 26, I'm not going to lie. I was like, sounds good. That's exactly
Making some money.
Exactly. I was like, that's exactly what I'm going to do. Sounds perfect. And so I networked my way to my very first job, which was in Zug. I was an analyst to start with, doing research and advisory for some of the largest oil trading companies in the world. And I was living in Zurich back at the time, working in Zug.
Great combination.
Great combination.
However, then in 2021, you decided it's time to switch up the industries. You joined Ace Ventures. So what attracted you then to move from oil trading to the startup world?
Yeah. So after my 3 years here in Zurich and working in Zug, I moved to Geneva to join another oil trading company. So this time I was on the trading side of things, and I've been with them for a bit over 3 years. And then number of different reasons decided to leave the company, but this also happened just before COVID hit, right? So It was a terrible timing all along, right? Like all of a sudden I found myself without the previous job, like with an offer for another job that then got taken away because of COVID and all of these different things. And so I had a lot of time. Right at the point, I had a lot of time, and I was like, look, I'm fortunate enough to not be in a rush to really go and find something else. And maybe for the first time, I can just stop and think about what I really want to do beyond money, right? That is important, don't get me wrong,
Sure.
But there is more to it. And so after some reflection, I just really decided I wanted to do something a bit more purposeful and impactful, right, than oil trading, crude oil trading in particular. And so I started to get really interested in startups and VC in particular, right? Investing in particular, early stage VC investing. So I started to speak with a number of different Swiss-based VC funds. Ace was in Geneva. I was in Geneva. It was
Perfect match.
It was a very good match. They gave me a chance, right? Because it's not obvious. Like from oil trading to early stage VC investing, and in particular what I mostly look at, which is climate tech, it wasn't obvious.
It's quite a shift, yeah.
I had many people that at the time telling me you're never going to be able to make this change. Many people, and thankfully I proved all of them wrong, which was a big satisfaction afterwards. But yeah, so I joined Ace on a more junior level, to be completely honest with you. But then I mean, clearly it proved to be the right choice, because in 3 years I got promoted multiple times to them a principal. So honestly, I'm only looking backward, and I'm very happy that I made the choice back at the time. Very happy that they made the choice. It's been a great ride, and I'm definitely looking forward to more coming and more to build with Ace.
Absolutely exciting where this is going. You said it's quite a different industry, obviously, but I'm also sure that there were some skills that you developed in the oil trading business that you can now apply in the VC world as well.
Yeah.
What were they? What did you take away from skill set and sort of mindset, etc., that you can now apply in your job?
Yeah, of course. I think it's a couple of things. So when after my master's degree, I was a researcher for a while. I think that's the first thing that I brought with me, which is really the ability to research topics, analyze topics, and dissect the problem, right? And present it in a clear way to the different audiences and stakeholders. In VC, we do a lot of that. There is a lot of critical thinking, a lot of analytical skills that are required. And I think having that background from the research standpoint was really helpful. And then second, working for an oil trading company, right? You get to see a lot, and it's interesting. We always have this dichotomy between trading versus investing. One is very short-termist, trying to exploit some inefficiency and make money really quickly, very short-termist type of approach. Investing is about holding a position in the long term, making money in the long term, really believing in the fundamentals and all that. So there is always this dichotomy. But that being said, I think trading is the closest thing to early stage VC investing when it comes to a few things. definitely understanding risk reward, right? I'm in the business of taking high risk. VC investing is early stage in particular, and is a high risk business, but it's about understanding the risk that we take for the right type of reward. And so it always comes down to that. And then the second thing that I brought with me is definitely the ability to be comfortable losing money, because you're going to do that a lot. I did that a lot. I did that a lot in trading, continue to do a lot. Hopefully not too much. But yeah, it's totally part of our game. And then maybe the third thing is really like just moving with conviction, because you're going to be wrong and you're going to be right. Mm-hmm. But you want to make sure that you have conviction every single time you take a bet, whether if it's a trade or it's a bet on a different company. So I think that's what I brought with me and what Ace saw in me when they decided to hire me.
And one thing that we often forget about VCs is before you can actually start investing yourself, you also have to raise money, right? So you need to have funds to be able to deploy them in the second place. So how do you find your money? Who are your investors?
So how do we fund our money? Well, we also fundraise, basically the same as our startups. We fundraise from a number of different type of investors. We also call them investors. There is a broad spectrum, but without going too much into the detail, because we can do an entire podcast on that, on VC fundraising, and I'm going to leave that on the side for now. But our investors, that's what I can tell you, like we're right now investing out of our fourth fund, which is called Swiss Tech Outliers. There is a strong Swiss focus for that. Therefore, as you can imagine, our strategy really resonates a lot with Swiss-based investors. So we have a mix of institutional investors. We have been lucky enough to be backed by two of the largest Swiss corporates.
Amazing.
Yes, very. And we have a number of different family offices, number of ultra net worth individuals, family and friends, and then a number of, I would say, very high-profile Swiss entrepreneurs. So people that build massive companies. More often than not outside of Switzerland. They became really big outside of Switzerland, but they still see what we are doing with Swiss Tech Outliers, and there is a great vote of confidence from them backing us.
You mentioned your investment strategy. You focus on Swiss companies, Swiss founders. Ultimately, you want to invest in the best companies out there, no matter where they come from, right, to deliver the returns. Why is the timing, the momentum right to have a Swiss focus these days? Is it undervalued assets that are out there in the market?
I mean, definitely, that's one way to look at it, right? Like we do think, Switzerland overall is a more attractive market when it comes to valuations versus other ecosystems. That's also because it's not as developed as other ecosystems. You typically see that the round sizes are smaller, like the valuations tend to be a bit smaller. So, of course, there is an element of that. When it comes to our strategy and why we think is the right moment, so maybe two things. On the strategy first, so we invest early stage, so seed and Series A, in Swiss tech startups. And I want to define Swiss tech startups. I always say this is not a geographical strategy, it's a theme. So for us, we invest in Swiss tech founders wherever they are in the world. Like we try and find this link with Switzerland. Typically, these are the founders that have studied for a period of their life at ETH in Zurich, EPFL in Lausanne, or in a Swiss university or school, right? Yeah. We track, 500 of them only, alone in the Bay Area. There is 200 of them in the East Coast, the US. So you can imagine there is a lot of them. And so this gives us a bigger investment universe, right? Which I think it's really important because, as you said, we want to make sure we invest in the best and not in the best Swiss. Right, in the best in Switzerland, because let's remind ourselves this is a small country. So we want to make sure our investment bar is really high. And that's how we design the strategy, basically. And then connecting to why the opportunities now, we have historically Ace has been, and I think that's also what differentiates us from many Swiss-based VC funds. We have invested in the US since, and in general globally, since we were born, right? Since day one. Today we have investments in emerging markets, in Africa, in Indonesia, in the US, in Latin America, you name it. We've done all of this. In Europe, of course, in the UK, in Germany, many different places. But that gave us really the ability to see the entire world and really be able to have a benchmark for what is best in class.
Oh, great.
And so, correct. And so, if I look back 10 years ago, why Ace did not invest a lot in Switzerland, simply just, I would say, maybe the quality wasn't there yet, right? Like for a given company, given business, you will often see a copycat of what someone else in the US was already doing or in other countries in Europe to then become a perfect acquisition, right? To then, for these businesses to expand to Europe and to Switzerland. And so we observed that in the past, of course, we opportunistically still made some investments in Switzerland, but it was not a focus. And then I think this has changed recently. So I joined ACE a bit more than 3 years ago, and we started to observe the market and be a bit more present in the market. I started making some investments out of a mandate, so not out of the fund, just to test our strategy. And we really started to see something really interesting, which is about the recycling of the talent in the ecosystem, right? When you start to have like a number of critical exits, by exit, I mean like bigger exits. So, founders that sell their companies, then you have a recycling of this talent in the ecosystem. Yeah. There is the employees that become, operators, become future founders. The previous founders that found the second company, they become angel investors, advisors, operators, new founders, VC investors. So it really does create a very virtuous cycle, right? That's how many other ecosystems were created. We think it's an amazing opportunity. We are in Switzerland. We've been here for many years, and so we definitely want to capitalize on that. And in order to capitalize on that, we also completely rebuilt our team, which was necessary. Today we are 6 people at Ace Ventures, 3 partners, 3 investment team members, and the entire team is built on these 2 core skill sets, which is either we are operators or founders or engineers, which we really think is the best combination of both worlds. You want to be able to advise founders on company building topics, for instance,
of course,
by having built a company before. We think that is really important. Yeah. If you don't have that, and you will often hear me saying, I never built a company in my life. I never would build one, probably. So you'll never hear me giving great advice to founders about how to build a company. So that's in a nutshell, the strategy and the opportunity.
I love that. And I think you mentioned a really important point, the flywheel, basically, that has kicked into the Swiss startup ecosystem. We once created a map called the Swiss Startup Mafia to actually map that, where you see Correct. How many other companies came out as an investor, founders, or key people, key hires from earlier successful exits or other companies. And it's really astonishing to see that this starts to grow and to kick off.
Completely.
The health of the ecosystem, I think, is really depending on that.
Really important.
Yeah. So now let's talk about, you have the fund ready, you have the team ready, and now you want to invest in startups. Mm-hmm. The first question is VC money the right amount of funding for every Swiss startup out there?
And the answer to that is no. The answer is no. I think not every startup and every business is suitable for VC investing, and just likewise, not every other type of investor, let's say a family office or an asset manager, is suitable for high growth tech startup, right? Like there really is a mismatch there in terms of expectations on return profile of the investment. And let me tell you a bit more about this. This is my experience. Again, I really don't want to generalize, but sure. I've been looking at a number of Swiss startups for over 3 years now, and I very often see founders building what I call, SMEs or SMBs, small, medium businesses, and thinking this is a startup, therefore I should be getting VC funding, right? That is the
huge
thought
mismatch.
Process. Huge mismatch. Yeah. That is the typical thought process, right? Yeah. And for me, what a startup is it's a company with high growth potential, literally where growth is the only thing that matters, exactly. That is solving a massive problem and is looking to disrupt the world the way we know it for a certain type of customer, right? And they have, how can I explain it? There is always this sense of urgency, right? Like these startups, like these are unproven ideas, unproven concepts, unproven business models, often unproved technologies. Startups are raising a little bit of money to start, but then they're burning through the money. So there is always this sense of urgency and staying lean and acting really fast, moving with agility, with small teams and, iterate and try different things until you find that one customer, you see there is a demand, there is product market fit, there start to be some sign of first market validation. So it's very different from what I often see here in Switzerland, like these great founders, most of them coming from a PhD background, a master's degree, building these great technologies, right? Building great technologies, then really trying and looking for a problem to solve, right? Like they don't really have this concept of customer first. And then you start to see they become like these mini corporates, these mini SMEs, these mini SMBs, 10 people, everyone is a C-level, lots of management, never saw the products before. So, but you have head of marketing. I kid you not, I've seen pre-seed startups where the founder already is a personal assistant. So if you are at the point where, yes, right? Like if you are burning the money to have a personal assistant, I don't think you have any sense of urgency whatsoever. Yeah. Like you don't, I'm sorry. And so there is a lot of that. And I don't think any of this is suitable for venture capital. We're in the business to invest in fast-growing startups. So growth is literally the only thing that matters. It's early stage. Then, we can talk about the different stages, but early stage, that's the only thing that matters. Yep. Unfortunately, I also think this is a separate story, but a lot of this also comes from bad advice that is given to startup founders. And therefore, they just, follow that and maybe create the companies a little bit like mini corporates. Yeah. Because probably the advice does come from corporate people or people that never really built a startup. And so, yeah, that's what...
They are like what you said before, that you really only want to take advice from people who walked the same path before.
Yes.
Because if someone who never built a startup gives you advice on how to build a startup, it's probably not going to be that useful.
No, but I give you a great example. Like you're learning how to ski. Would you ever listen to someone that never skied? The first time you put the skis on, you're let's say on a red slope, maybe you're even on a blue, you don't even know how to snowplow. And then like someone comes to you, never skied before, and tells you, oh, you know what, that's what you should be doing.
Of course.
No, of course you won't listen to the person. But like, no, let me get an instructor. Let me get someone that at least, even if it's not someone that skied before, maybe 1, 2, 3 times, maybe 10 times that has done it before. I mean, it's obvious, right? You will think it's obvious, but it's really not obvious. And so I can only... Yeah, I don't advise anyone. That is not my job to advise people on what they should be doing. But I think in general, founders should be very wary of the advice that come to them and really listen to the right type of advice.
Yeah, filter it strongly.
Completely.
I also like you gave basically the real definition of a startup. It's growth at all costs, basically. That is what a startup is here for. And often we just use this terminology of a startup a bit inflationary, right? Everything is a startup. We think it's a young company, but it's actually not. It's you want to grow as fast as possible. And although it's great for the economy to have SMEs, etc., it's not a startup.
Correct. And it is to have, by the way, I want to reiterate that it's great to have SMEs. And it's great for these people to build these businesses. They're going to be, totally, I have a lot of respect for every entrepreneur out there. Create a business, grow to some extent, go places, build a great business, build a great company, find the right source of funding for that, and you're going to be much happier doing that rather than raising VC money. That then is only going to put you under a level of pressure that's probably you're not even expecting, right? Yeah. Or you don't know what you're signing up for, right?
It's just a lose-lose situation in both cases. It's not what you want as a founder. If you get VC money is with the ambition to build an SME, and for the VC, it's also really not fun because you lose out money that you could have invested somewhere else.
Completely.
Now, let's say I have a startup and I really want to grow, so I think VC money might be a good fit for me. One thing that we often get asked is, but how do I make my startup visible to VCs? How can I get their attention? Because it's so difficult. I don't know anyone. I'm a first-time founder just starting out. What's your tip? How do startups that fit that description get your attention?
It's so interesting. Do they ask this question a lot?
They do. Yeah.
I wish they
because you also want to have. It's both problems. You want to have the best founders, but the best founders also want to have VC money.
Yeah, I am gonna change the focus of this question, and I'm gonna say something I strongly believe in. It might be controversial. I might get in trouble after this. I don't know. But for me, don't try to be visible with investors. Just focus on your customers instead. Yeah. Like, honestly, just focus on your customers. I can't stress this enough. I see way too many startups in Switzerland being overly obsessed with, I need to find investors, I need to find the money, I need to be visible with investors, whereas you should be focusing on your customers first and foremost. Yeah. And let me tell you, if you find your customers, you're solving their problem, you serve them very well, you sell them your products and you start to grow, the investor will find you.
Exactly.
I promise you, the investor will find you. Because these days, the VC industry is becoming more competitive than ever. There are so many VCs out there. There is a lot of dry powder. Dry powder meaning money to still be deployed, right, in startups. Plenty of that. You grow fast. You don't have to worry about it. right? You don't worry a second more. Like the investor will find you. So focus on your customer first and foremost. Really make sure that you have your traction, you're growing, investors will find you. I think that is, to me, is the most important thing. I see way too many startups focusing on investors. What do the investor want? What does say? No. What does your customer wants? Someone once told me one thing that I think is very true and very intelligent, and it is your customers are your best investors because they give you money and is non-dilutive.
Exactly.
So keep that in mind, please. Whenever you're out there, get your contracts first from your customer, and then think about the investors. And then how to find the investor, we can chat about that in another
sure.
separate podcast.
I would even add all the sort of the grants and all the non-dilutive funding out there. I would even add that on top of it. You should focus on customers and that's it. That's
focus
why
on
you
customers
exist.
and that's it. And quite frankly, like, of course, I'm generalizing, right? Because every business and every startup is different. And I know there is, in deep tech, for instance, there is always the problem of the startups that have like high capital intensity requirements. Therefore, they need to raise more money to prove their technology and so on. And so, of course, non-dilutive source of funding, again, are important. But even more so is important a customer that signs with you a POC or a letter of intent or is working with you on the technology. So I think these things come first.
Yeah, I feel what we often get wrong is that we think I exist to close a funding round, but that's
Correct.
not true. You exist to serve customers and to solve problems. And if you build something meaningful, everything else will fall into places. You might need less money because you close more customers. Or if you do that well, the VCs, you said, they will find you because they want to have a foot in the door.
Silvan, you got it completely. I think you should be the one advising the startups. You don't need to be here.
I love to hear that also from a VC perspective. I really feel this is something that we often get wrong in Switzerland. We think it's such a great way to celebrate the funding round, etc., which is an achievement. Okay, I get it. Celebrate with your team because you put in a lot of work, but now you have to go to work and deliver.
Absolutely.
It only starts really to count now.
Starts now, and there is so much focus on these vanity metrics because those are the only metrics that are visible to the market, right? Yeah. These are private companies, therefore their financials are not disclosed. So the only thing you see is the funding amounts, the funding rounds, and all of that. But in no way this is indication of the quality of the business or the success of the business. It never is. It never is. Yeah. You see companies raising huge amounts of money, going public, still going bust. Yeah. Like it's the nature of businesses. Don't focus on those vanity metrics. Don't focus on building a good, sustainable, fast-growing business for a big problem that you really feel passionate about and you want to change the world because of it.
Yeah, yesterday we recorded a session with Karim from Sirion. They went into YC, I think 1 or 2 years ago. And he said the only 3 metrics that matter: revenue, growth, and burn. The rest don't care.
Blessed words. Blessed.
Exactly.
Bless this person.
Talking about traction, okay, we have revenue and growth and burn, but at what stage do they get interesting for you as a VC at an early stage? Like, is there any revenue threshold or any minimum growth rate that you say below that we don't even need to talk?
Yeah, I'm going to answer this question from our perspective because, again, there is a multitude of VC funds out there and they all have different criteria. And again, there is no, just one answer fits all. There is different type of companies. If you're building a consumer app in fintech, then it's not the same as building a robotics company. These are very different type of businesses. But I can give you some general, maybe like framework that we use when we are evaluating a seed startup. We like to see some initial traction. Again, what does this mean for maybe a B2B SaaS business? So you're selling, a SaaS product or even like an enterprise software solution, corporate clients out there. Ideally, you want to see some initial recurring revenues. Yeah. Somewhere in between, I just want to give a ballpark, but like maybe 100K to 500K, something like that, US dollars, Swiss francs, same.
A month or a year?
Yearly. Okay. Annual recurring revenue.
That's fair. That's doable.
Something along the lines of that. Like you're starting to see some initial traction. Yeah. You've not reached product market fit yet, but you see some initial traction. Yeah. Then, of course, if you are on the other hand, and again, there is an entire spectrum. Like we could be talking about a quantum computing company or a nuclear startup. Of course, that is very different game. But again, ideally, you want to have have some initial, showing that you have some initial interest, right? You want to sell your small nuclear reactor, you have some letter of intent, for instance, from a serious government somewhere in the world. You have some initial paid proof of concept, for instance, for your robotic solution. Maybe you're co-developing something. Like there could be different things, but we want to see that. Then at Series A, it's a bit different. Again, it does depend again on I think on the business model, but ideally you have reached the 1 million ARR. Ideally, you grew fairly fast. Again, there is so many rules out there. The 3-2. I mean, let's say if you grew 3x from the previous year, it's an absolute great start, right? And then you want to capitalize on that growth. But no business is created equal, so that's one thing. And then if you are more on the deep side of things, you want to have just this initial interest to be a bit more established. At this point, they're paying 6 figures something. Maybe there is one customer, you convinced one logo to have that, and that is already good.
And I mean, all these signs, all these metrics that you just mentioned, they just are basically a signal for you as an investor. Okay, this is helping me to de-risk the case a bit, right?
Yes.
Because in the end, it is higher risk, but this is also a bit of a signal that there might be a bit of a lower risk, that this is on a good trajectory.
Absolutely. At every stage, you are de-risking something. There are many different frameworks out there on how you de-risk at the different stages. But yeah, I mean, at the early stage, you really want to make sure you have de-risked the technology, you're starting to de-risk the market and all these different things. And so then after that, you can really focus on the growth of the company.
Exactly. Another huge topic that we always see sort of investors and startup founders fighting or discussing about is, of course, the valuation.
Yes.
How do you determine the right value?
How do I determine the right value? Yeah, well, good question. I think it's always is the market that decides the price, right? For a given startup. At the end of the day, you're out there raising, and your valuation and your dilution is a function of many factors, right? Growth being the first one, right? If you're growing really fast, you can command a higher valuation. If you are like a very high caliber founder, and by high caliber founder, I mean you're a repeat founder. This is your second company, and the previous one was a big success, right? Then typically you can command a higher valuation and the lower dilution. You have like very big logos already, right? Like then that also can command a higher valuation. Then the opposite is also true, right? If you're not growing really fast, you're at the beginning, something isn't right, or there are many different cases, or you're starting out in a situation where a bit distressed, then of course this will impact your valuation, will impact your dilution, which typically needs to be, will be higher. So it really is a balance, right, between the investor and the founder. Demand, of course, also plays a role, how much demand there is for your round.
The fear of missing out.
Fear of missing out. It's really market dynamics. It's supply and demand, right? Yeah. And how the two parties get together. At the end, ultimately, the market decides the price, right? Yeah. I believe, that's what I've always seen, the best founders in the world can have multiple offers and decide which investors they want to work with, and they will make their own consideration on which term sheet to accept and which price to accept. Yeah. But ultimately, that will be the market price.
Exactly. And it's always great as a founder, to develop this momentum, but it's also very difficult to do because it's sort of like juggling 500 balls at the same time. And you try to have 3 or 4 offers on the table after you're done. What gets you as a VC moving? Like, when do you get really attracted to say, we do everything we can to get a foot into this deal?
Mm-hmm. Again, can only speak for Ace Ventures, but we are early stage investors. We get really excited when we see an exceptional founder. An exceptional founding team, I would even say. So not just the one founder, which is maybe the person you're interacting the most with, the CEO, but a group of co-founders. When they're really exceptional, we get really excited, no matter the stage, right? And by exceptional, I mean just an individual that at some point in their life did show, prior to finding the company, some sign of exceptionalism or something that happened earlier in their life, like... We often say this thing about founders, they need to have this big chip on their shoulder. I'm sure you heard that a lot. Interestingly, oftentimes you look at some of the most successful founders in the world, this comes from very early in their childhood. Like sometimes some traumatic experience, could be anything, and they live with that. They live with this constant tension, this constant tension about something that they haven't achieved yet, and that's where they want to go, they want to succeed. So we look for this type of people that are not normal, right? They're not like people like you and me. I mean, I think at the end of the day, we're well-rounded people, can get along with many different people. What's my boss Steve would say, like, these are people that are on a spider charts, like very skewed results, like they're extremely good at something and maybe they're completely terrible at something else, right?
Sure.
So we look for this type of people, just exceptional individuals that are very driven, have a lot of grit, have a lot of passion for what they're doing, they have a lot of determination to make things happen. And we try and find some early sign that they've done this before in their life. That's what really gets us excited.
How do you find that out in people? Is it through a personal call or a personal meeting, or how do you grasp whether someone is exceptional or not?
Yeah, it's always meeting the people, right? So, I mean, I think, of course, these days we always interact. The first interaction is via call. But then again, when you see, okay, this is an interesting person, I want to meet this person again, then you meet them in person, right? And then you get excited, and then you bring the rest of the team, the partners, to meet the person. We get excited, right? It's about like you can start to see there is like, wow, this is a person that I think, again, I'm quoting Steve on this. Is this someone that I would like to work for? Right?
That's cool,
That's typically the thing. Do I see this person and he sold me so much, the vision about his company, about the mission, about the rest of the team, about what they're building, about how they're changing the world? Would I work for them? If the answer is yes, I think you have something. Yeah. And so, yeah, I think that's how we do it.
That's a great perspective. Now, going back to the valuation, I know, again, it really depends on the case, on the industry, etc. But let's assume we are a B2B SaaS startup. Mm-hmm. What are sort of the valuation ranges that you see in the market these days at the seed stage, but also at the Series A for such a company?
It's difficult to answer. It just depends so much. Honestly, I just look at deals that get done out there, and I'm a bit lost when it comes to certain sectors. I think AI in general is commanding very high valuations, right? Yeah. Regardless of the traction, regardless of where they are in terms of revenues. And so you end up like seeing very high revenue multiples because it's something really, the investors that back those startups think this is something really revolutionary. We want to be part of it. And so I think they're happy to accept a higher price. But there is other sectors like climate tech, for instance. I think over the past 2-3 years also commanded very higher valuation. The infamous green premium has been seen a lot. Again, not necessarily linked to what is the true value delivered by the startups and the businesses. So a bit lost. But if I have to, it's difficult. I cannot think of today like investing in a startup, in a software company that is not AI. But if I come across one, okay, and they are, at 1.2 million in revenues and they're growing maybe 4x versus the previous year, right? They had like 300K in annual recurring revenues. This year they have 1.2, growing really fast, and maybe they want to, raise a 10 million round. Mm-hmm. So what I would expect to see is a valuation somewhere in the range of maybe 40, 50, 60 million post, something along the lines, depending a bit, but yeah.
So that would be the Series A part.
Yes.
And for a seed, when you say, okay, maybe you're at like around 300K ARR, you're just getting started, but you have a good first traction, what would the valuation be there roughly? Same startup.
Same startup. So no AI, no
nothing
phone.
Fancy.
Okay, well, maybe a 10 million post.
Okay.
Roughly. Yeah. But again, it depends. Then,
of course.
You invest in a YC company and that would be very quickly 15, 18, 20. Yeah. So it depends. Certain things are notoriously like indication of a signal, right? Like the versus noise, and being a strong signal, therefore valuations be slightly higher. But I think we're still looking at these ranges more or less.
Okay. No one will hold you accountable for these numbers, but I think it's just good for people to give them a little bit. I get in trouble
after this, like, Steve is going to call me. Like, what
did he say? Exactly. Now, closely linked to that is also the percentage of shares of equity that founders give away in such a round. Mm-hmm. What is sort of the common range that you see or would even recommend founders to give up in such a round?
Again, it depends on the valuation discussion of before. Like like a standard dilution of an early stage is around 20%. Yeah. Again, it depends, but 20% more or less. But again, if you are a phenomenal founder, second time founder, growing incredibly fast, and you already have you're selling to a very big customer as your first customer, then maybe you can lower 15%. There is a lot of demand for your round, but I'm not. I'm saying these things because this is what I observe, but in no way advising founders to necessarily do these things. I mean, at the end of the day, don't get me wrong. If you're a founder, you of course want to give away as little as possible of your company. It's just natural. Yeah. Like if you're an investor, you want the same thing. You want to get as much as you possibly can from the round. So it's a balance between the two. At the end of the day, it needs to be something that is fair, right? We call it a fair valuation, a fair dilution. Most parties will settle around the 20%, but it depends. Sometimes it's bigger if the company is a bit distressed. And again, it's also if it's the first round out there in the market, but then things change if it's like an internal round, or you're not maybe delivering as you should have, or the company is not progressing as well, then of course typically you have a slightly higher dilution in these rounds. It
Makes
depends.
Sense.
It always depends.
Yeah. Now, I'm also curious, now after talking about valuation and shares to give away, etc., I'm also curious to see how you evaluate startups beyond traction and valuation. Maybe we can talk about some red flags. What are some red flags that you see in deals that just make you want to walk away immediately almost?
Yes. Okay. Well, there's a few things. In general, I think I stay away from the very early stage startup. Sometimes we speak with pre-seed startups, then are going to raise a seed at some point. They already have a 10 people team and indeed never sold the products before, right? And I'm trying to figuring out why do you have this very high burn? Like what? Again, you need to go into the details because it's not black and white, but like I oftentimes see this desire to spend and expand and hire very relevant people. And when you ask them, okay, why do you have a head of marketing? Oh, because we had a great opportunity to hire someone. That is not relevant. You're not selling the marketing. There's no need for marketing.
Yeah, you need marketing to generate leads,
exactly.
But if you have nothing to sell, what are they doing all day?
It's a very beyond me. So I think in general, I tend to like teams that stay lean, right? Yeah. Like stay lean, stay frugal. They spend as little as possible until they actually have some traction to show. Yeah. So I think that is one thing. Again, I'm mentioning things that we commonly referred to as red flags, but each case is different, right? Like sometimes you see the founder, maybe not really being very involved in the sales process and hiring a head of sales or a chief revenue officer very early on. It's like, oh, the person will do the sales. It's like, no, you're the founder. Maybe you should be the first. You should be the first salesperson of your company, and actually, you're going to continue to do so for a very long time.
Hopefully,
hopefully, right? Like for a very long time. Like honestly, Series B passed. Like you need to get the first customers in the door, and that is your role as the founder, as the CEO of the company. So I also typically don't like that. But again, it depends. I've seen cases of startups that somehow manage to make it work. Other red flags, I mean, personally, I just really don't like. I mean, you need to get along, I think, with the person on the other side, right? It's like so clicking with the founder. Yeah. But when you start to feel they're non-transparent about things, they're huge red flags. They're hiding things, or they create FOMO, which was not necessary and was completely invented. Like, okay, then I'm staying away from this situation because then it's a long-term relationship afterwards. Yeah. And if you're going to be non-transparent and about things, that's a horrible way to start.
I'm curious there because there's sort of a balance to strike for. Of course, you're not lying or anything, but there's a balance between I want to show you how good we are. I want to sell the company and my team, but also telling you what we don't know yet, what is maybe not going so well yet, where we need some help. How is that balance from an investor perspective? Because you want to hear both, but at the same time, you also want to feel excited about the startup, I assume.
No, of course. And at the end of the day, every startup, when we make an investment, we're always convinced about something and not convinced about other things, right? There is always risks. Right. We always discuss this in the AC. It's like what can actually, to be fair, we spend most of the time discussing what can go right, like how this become a big success and less about what can go wrong. But there are risks inherently in the startup. That's just the nature of it. And I think it shows, personally, I like the founders that show a lot of maturity, the maturity to acknowledge what they're not good at and say, just candidly admitting it and saying it and sharing it, by the way. And like, you know what, we're phenomenal at this and we're going to triple down on that because we're phenomenal. What we're not good at is this. And we know about it. Yeah. And we're actually thinking about ways to solve it, right? Like, and sometimes it can be also with the help of your investor. Not only, but it can be, right?
Self-awareness in that sense.
It's super important. And to me, it's also like, it really does show that you are in this for building something in the long term. Because if you're only showing me what you're very good at, like your best metrics and all of that, and not the things are not going well, then this is actually, unfortunately, is going to continue afterwards when we are invested. When you're only going to show me every quarter, we're going to speak about your business, how things are going, how things are evolving, and you're going to continue to try and hide that things are not going well. And therefore, it's going to be impossible for us to be able to help you. Right. So I think this is so important, and being honest and candid. Just again, in no way I'm saying you should be going out and say, this is all the things that we need to fix and let the entire market know. No, of course, there are sensitive information there, but you're fundraising. Of course, you're showing the best things of your business when it comes down to our diligence, and we're going to come there and really poke you, right, on all these different things. Be honest and candid. These are the things that we don't do well. You have no idea how much I appreciate that.
I like that. I do have a bit of a provocative question to then switch to the future outlook. I think it was Sam Altman who said that in the future, there will be $1 billion company, unicorn, led and founded by only one person because of the AI age that we're about to enter or already in the middle of it. So I wonder, with that, being able to produce more, having more leverage, also when coding stuff, etc. Now, again, talking about the software company, do you even need VCs in the future, or will the companies be just so small and so much more efficient that they will just bootstrap all the way?
Yeah, it's an interesting question. I am a big believer in general in the power of AI and, like general intelligence, if we can call it like that. I mean, do I envision a world in the future where there is going to be no need for the VC investor in the middle? Possibly.
But really depends. Like in deep tech, you will probably always need investors.
Yes, but then like what I'm thinking here is like, at the end of the day, as VC investors, we are in between our own sources of capital, right?
True.
And the people that need to get financed, right? Like we kind of like put the two things. I wouldn't say we're an intermediary because of course we do add value to this process and we select with the ability. That's why we're so-called managers, right? Fund managers. But then on the other hand, is there going to be a future where like this capital flow going directly from who's funding us directly to the startups become more efficient and less disintermediated by VC, and the value that we add as VCs can be added in other ways to the companies? Maybe. I don't have the answer to that. I think it comes down to it comes down to a few different factors, right? Which is like, do VCs add a lot of value? Which of them add a lot of value? In what way? Yeah. Is this the person, human factor? Is it going to continue to stay? The person-human interaction, I can totally see many VCs out there being disrupted on the basis of this topic. And then when it comes to the other side of the equation, you said, there is going to be one company, company funded just by one founder, and AI is going to do everything and anything. I mean, again, I might see a future like that. Like, why not? I don't think we're going to see anything like that in the immediate future. I think I'm probably going to be safe with my job for the next 10 years. But I'm completely convinced that AI in general will disrupt many industries, including our industry, which is financial services, by the way. I see so much inefficiencies in financial services that definitely an industry that needs to get disrupted. And when it comes to, just being more efficient in funding the different startups, yes, why not?
You will go with the flow and have to adapt maybe eventually.
I mean, eventually, like I'm very open. Completely. That's why we are big believers, and we do use AI a lot in our job, right? Just to become very efficient and trying to do things really fast so that we don't need to scale our teams any further, right? I think that's number one preoccupation in the more immediate, future. before the one-person company doing everything with AI, I think the companies as they are now, and I'm also thinking us as a VC fund, there might be no need to hire like a 10-people team, a 15-people team. We might never really need that.
Of course.
We might be able to work very efficiently, helped by AI, right? Very productively, very efficiently, and keep expanding our knowledge, expanding our research capabilities, our sourcing, our screening, our diligence, all with AI, but remaining a lean team. So I think that's more something that we're going to see in the immediate future, more so than being non-existing VC anymore.
That's a more positive outlook in
Yes.
that sense. Now, if you look at your portfolio, you have invested in many companies that have also been guests on the Swisspreneur Show, like Destinus, Neustark, Anybotics, just to name a few. And I know it's like asking a parent, who's your favorite child? But is there any story that particularly stood out from your portfolio that you are just very proud or very excited about?
Yeah, indeed. It's very difficult to pick one, particularly because, these are three companies that I know fairly well, Neustark and Anybotics in particular. And they worked a lot with the founders, and I saw the different financing rounds coming together. And so it's difficult to pick one. Maybe I'm going to pick the one where I've been less involved with, just not to, being
Sure.
not nice with the other two, where I was very involved with, which is Destinus. This is not an investment that I led or that I sourced. It was done prior to me joining, but I still think it's probably one of the best investments we've ever made to date. And I think it's, you asked me what's the most interesting story, and I think there is a lot to learn here, for sure. And thinking, again, connecting back with the founder with a huge chip on their shoulder and really trying to be the successful one and showing the entire world that you can build something big and very successful. So I think it relates a lot to that. So Destinus is an investment that was done prior to me joining. You had Mikhail here as a guest. You know what they're doing today. They initially started, I think, 4 years ago with building hyperplanes, so hydrogen-powered aircraft.
Insanely ambitious.
Insanely ambitious, of course, huge ambition. And then as they were going through, their initial putting together the products and the technology, assembling it and testing it and selling it, I think they very quickly realized that there was a bigger opportunity for them, right? Which was when the Russia-Ukrainian conflict came to life. And so they pivoted very quickly and they started to focus on drones, right? Defense technology, but powered by the same technology concept. So they're all experts in aircraft, they're all aerospace engineers and very technical, and they're very good at that. And they pivoted really quickly, and within, honestly, 2-3 years, they grew like impressively fast, selling these products to the different governments involved in the conflict. The Ukrainian government, of course, not referring to the Russian one. So very, very big success story out of Switzerland, just right here. Zurich,
Exactly,
right?
which is incredibly cool.
Incredibly cool. And yet, if you speak with, I think you speak with, I still think this is, our most successful investment in Fund 3 by far. And I think probably one of the most successful we ever made. I can't take the credit. It was an investment that I made, but sure. I only observed. And then if you look at the story of how we got to funded this company, right? We were previously invested in the prior company of Mikhail, right? So we backed him before. I think this was his second company, if I'm not mistaken, and he's went to YC twice, and this was his second company at the time, which we previously backed. And then for a number of different reasons, like he didn't necessarily work out as he wanted. There was he's Russian passport holder in the US and a public company in the US. I think the SEC and the US government really didn't like that anymore. And, almost literally got stripped out of his shares and then had to leave the country and then, found himself over here in Europe, just building something new and something different. And I just think it's an incredible story. When he put together the very first round, called us, was like, that's what I'm doing. You want to back me again? I said, yes. And then you ask most VC investors of that, they don't even know about the existence of this company. It's really under the radar. And I mean, based on my knowledge and information, and again, I'm not looking at funding metrics. I'm looking at financial metrics and revenues and all of that. I think this is probably the largest European defense tech company in Europe. So we're very proud to having backed them. The team is phenomenal. And I think it just goes to show that having this network of repeat founders and people that built something before, and it doesn't matter if they didn't get funding from tier one, whatever investor whatsoever, you can build a great company out of everywhere if you are the right person.
Exactly.
Right? And
that's the right message.
And that's exactly the right message to me. And this is an incredible story. I know you had Michael here on the show, so hopefully people will go back and listen.
We will link to that in the show notes so people can go back and listen to it. Now, you also have a very exciting time coming up. You're about to open your third location after Geneva and London. You're going to open offices here in Zurich. What's the future going to look like for you with this new offices here in the German-speaking part?
Of course, we are very excited about that. And I think this is a move that was necessary because honestly, we have, first of all, like many portfolio companies here. So being here, it's much better. Like it just makes it a lot more spontaneous to catching up with them, to seeing them, first of all. And then secondly, it's become like our main investment hub, right? Like it's obviously here, it's obviously Lausanne because of the universities, not only, but Zurich it's just booming in terms of like startups and founders, not necessarily just, spin-offs coming out of the university. If you look at also startups not spinning out of universities, like everyone is here. There is a reason for that. You have all these, ex-operators or previous founders that end up here, love the quality of life, or maybe worked at some big tech company. They want to stay here, right? And so we want to be close to them. And so it's very important for us to be on the ground. So therefore, we're going to make this happen this year. ACE historically has always been headquartered in Geneva. Again, when we started many years ago, this was not necessarily the biggest tech ecosystem. And so we decided to start from there. But we are very excited to be here. And so at some point this year will happen. I can't tell you exactly when it's going to happen. I'm hoping before summer, but there's going to be a presence here. I'm going to be the one making the move. So being here, please, if you're listening to the podcast, make sure to reach out and welcome me in town. And reach out to me for coffee. And we're going to look to hire more people on the ground for sure.
Amazing.
Continue to expand.
Perfect. Now to wrap up the conversation on this positive note, I also have some rapid fire questions for you. I'm just going to fire away and you have to answer in maximum one sentence. You ready?
Okay, yeah.
Very easy one to start. Italy or Switzerland?
God, you're going to put me in trouble with the Swiss. Italy for food.
Obviously.
And weather. Yeah. And Switzerland for how clean everything is.
What's the weirdest thing about Switzerland?
Well, there are so many. But you know what? The one thing here in Switzerland, and in particular in the German area, they are obsessed with silence and shushing people.
Okay.
Constantly, everywhere. Shh, always, everywhere. Oh. Trains. I've been shushed. Maybe I'm very loud, but I've been shushed in public parks and gardens and everywhere. The shushing is a big thing I've observed is a big thing for the Swiss Germans, for the Swiss in general. Yeah, I just find it very, very strange.
Interesting. I never heard that before. I can relate now.
Please start on the trains. On the trains is where, not in the silent area. You'll see it a lot.
Did you find the money that you were looking for in Switzerland when you moved here initially?
Yes and no.
Okay.
Yes and no. I think I'm happy, for sure, comfortable where I am. Maybe not exactly what I was expecting, but now I'm in a different career, doing different things, and very hopeful in our portfolio and the great home runs that we're going to have out of it.
Cool. And what is the most rewarding thing about being a VC for you?
I think it is working with a variety of people that are very driven, that are very ambitious, and they really want to change the world, right? They want to have an impact, visionaries. And I get very inspired by every single of them. Amazing.
Do you regret making an investment or regret not making it? Which one is better and which one is worse for you?
We always, in early stage VC, we always regret not making that one investment. It's always about that. Like, we don't regret having made an investment that goes badly. It's expected, it's a nature of our job. Sometimes this is just a rounding error. But having missed out on a great opportunity, on a company that becomes really successful, it disproportionately hurts us way more than investing in a company that didn't go well.
And the last question for you. Out of your soon 3 offices, Geneva, London, or Zurich, which spot is your favorite?
I liked the three cities very much. I lived in two of them. I never really lived in London. I've been multiple times, but I think Zurich. In my mind, Zurich is like a good balance of the two, right? It has the energy, the vibes of London, like it's moving fast and a lot is happening, it's growing fast. But then at the same time, it has the Swissness to it. Yeah. You know, like the calm, the peace, the clean, the quiet, silent, the shushing. So there is a mix of both words. I like Zurich a lot.
Perfect combination for you.
The one thing I would change, the language. If only was not a German-speaking city. I'm going to get in trouble after this podcast, I'm sure. Like all my Swiss German friends will no longer speak with me.
We'll make sure to make it very prominent that you said that. Amazing. That's a wrap for today. Ale, thank you so much for coming on the show. Good luck with the new opening and see you soon.
Thank you very much. Great being here.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.